Our next lesson in economics is trading stocks in the newspaper. Let's look at our goal for this lesson. Our goal is to know the various terms used in newspapers for reporting on stocks. Look at your vocabulary words. Stocks, volatility, greater the margin between the two numbers, greater the risk for stock to gain or lose. 52 weeks high and low. A share of profits received by a shareholder is a dividend. The activity the days before, the highest price and the lowest price of the stock, along with the closing price, is high, low, and close. The change of the price of the stock from the previous day is net change. Price-earnings ratio, relationship between price of stock and earnings made in the entire year, is PE ratio. Tells you how much of the price of the stock you will be paid in dividends by the end of the year, is percent yield. A 1 to 4 character symbol that is a kind of nickname for the company, a symbol. The risk and profit potential of a particular stock is volatility. The number of stocks that were traded on the previous day, volume. A man's felicity consists not of the outward and visible blessing of fortune, but in the inward and unseen perfections and riches of the mind. Until now, you have probably just breezed through the financial pages of the newspaper, ignoring those lists and lists of funny little abbreviations with numbers and fractions next to them. But in our little fictional story, since you have become a big-time investor, remember Massasoit stock, you want to follow what is happening since you invested in some other companies. Let's pretend that you have bought some stock in IBM and Wendy's fast food. You are looking in the finance pages, but when you find a name, you see some coded graphics right beside each name. What are they supposed to mean? Well, let's sort them out. On the stock marked pages, you'll see such columns such as the following. 52 weeks high and low. Okay, so on your notes, go ahead and put today's date. It says 52 weeks high and low. This will tell you about the volatility of the stock. Volatility gives you an idea of the risk and profit potential of that particular stock. So this tells us the risk and profit potential. If you see a wide margin between the high and low numbers, you can tell that there will be a wider risk than with other stocks which have little difference between their numbers in that column. Okay. So the greater the difference in the numbers, the greater the risk. The greater the margin between the two numbers, the greater the risk for the stock to gain or lose money for the investor. If the numbers show little difference between each other, there is less risk of loss, but there is also less opportunity to gain either. Okay, we're going to see the company name. The names of the companies are in alphabetical order and are usually abbreviated. Okay, so they're in ABC order, and they're abbreviated. You're going to see a symbol. Okay, we said that in the newspaper we're going to see the 52 weeks high and low. That's the risk and profit potential. The greater the difference in the numbers, the greater the risk. We're going to see the company name, which are in ABC order and they're abbreviated. Okay, we're going to see a symbol. You will see a 1 to 4 character yield that is kind of like a nickname for the company. So it has 1 to 4 characters. And it said it's kind of like a nickname. Dividend. Here you will see a dollar amount. This is the cash amount of money that the company pays you each year for the stock. Okay, so dividend. Is the amount they pay you each year for the stock. Percent yield. This number is the result of dividing the dividend by the closing price. This tells you how much of the price of the stock you will be paid in dividends by the end of the year. So percent yield and it says it's the dividend divided by the closing price. So it's the dividend divided by the closing price and it tells you how much of the price of the stock you will be paid in dividends by the end of the year. Okay, we said that a symbol is 1 to 4 characters. It's the nickname of the stock. We said that a dividend is the amount they pay you each year for the stock. Okay, we said percent yield is the dividend divided by the closing price, and it tells us the amount of the stock you will be, okay, I should have put a dollar sign right here on dividends, because that's a dollar amount. Amount of the stock you will be paid in dividends by the end of the year. By the end of the year. Okay. Dividends, I put a dollar sign here because this is in dollars. Okay. Okay, then we have the PE ratio. This is called a price earning rate. So it means price earning rate. This is figured out by calculating the relationship between the price of the company's stock and the earning a company makes in the entire year. It is figured by dividing the closing price of a stock by the earnings per share of each stock. So the closing price divided by the earnings per share of each stock. The earnings per share. Okay. And then there's volume. We said the percent yield is the dividend divided by the closing price. It's the amount of stock you will be paid in dividends by the end of the year. We said the PE ratio is the price earning rate. It's the closing price divided by the earnings per share. Okay, and next it says volume. When you see the volume figure, you are looking for the amount of stocks that were traded in the previous year. Okay, the amount of stocks traded in previous year. I'm sorry, not the previous year, the previous day. This number is given in hundreds. Okay, it's given in hundreds. This number is given in the hundreds, so you want to get the actual number of stocks traded, simply multiply the volume by 100. But look closely. If there's a tiny z shown before the number, the volume is not given in hundreds, but is the actual number of stocks traded. Okay, so if there's a z beside it, means it's the actual number. Okay. We said the PE ratio is the price earning rate, which is the closing price divided by the earnings per share. We said the volume is the amount of stocks traded on the previous day, and it's given in hundreds unless there's a z beside it. This means it's the actual number. Okay. Next, there's high, low, and close. high, low, and close. This will tell you of the activity the day before, the highest price and the lowest price of the stock. The closing price means the price of stock whenever the trading day ended. Okay, so that's what it tells us. High means the highest price. Highest price on previous day. The lowest price on the previous day. And the closing price on the previous day. Okay, we said the volume was the amount of stocks traded on the previous day. The closing price is the price whenever the trading day ended. Price when the day ended. And then there's the net change. The net, by looking here, you will see the change of the price of the stock from the previous day. You will learn whether the price has been rising or dropping. So this will tell you whether the price is rising or dropping. Okay, go ahead and study this lesson, study your notes, and answer the questions.